morning students. Today once again welcome to you all to today's session. I am Dr. Nitin Agarwal, Associate Professor from Timid College. So as again the financial accounting we are going to study, already you are aware of the different concepts or the basics of financial accounting. So no doubt course outcomes today once again we have to look that what about the course outcomes of financial accounting. It means after the study the students would be able for understanding double entry system and gap principles, understanding the elements of the financial statements and the related key accounting assumptions and principles, as we know that different principles are to be followed when we are going to maintain the books of accounts. Applying financial tools to analyze and interpret the financial statements of a company. When we have to apply the different tools, or we have to apply the rules to the preparation of the financial statement. So no doubt after this particular study the students would be able to apply the different tools towards accounting. Assessing and evaluating the business position through analysis of financial statement. So at the end of the year, whenever there is a need to analyze the financial statement, the students would be able or would have the knowledge how to apply the tools, different accounting tools or the formats towards making the financial statement as well as the analysis of financial statement. And creating, preparing the journal, ledger, trial balance, as now I think and I am sure that students are very much are having the knowledge, the sound knowledge regarding the basic accountings. So ledger, journal and the trial balance, cash flow and fund flow financial statements and company's final accounts, they would be able to prepare these particular accounts. And in today's session, we would be covering these topics as you may have a look on it. The profit and loss statement, because as we have to prepare the financial statements in a particular organization, so that time the trading account, P&L account, or you can say the profit and loss account and the balance sheet as a part of the financial statements are prepared at the end of the financial year. So profit and loss statement, we would have the knowledge of profit and loss statement. Basically, what kind of the information are being provided by preparing this statement. And what about the financial position? As we know about the balance sheet, or we want to know that exactly what is the scenario, what is the position, the financial position of an organization in the form of or in the sense of liabilities and assets. So what kind of the assets the particular organization is possessing. So every picture of this would be clear by preparing the balance sheet, and we are talking about the financial position. So no doubt today's session definitely will be covering about the financial position of our organization. And qualitative characteristics of accounting information, as students should be very much clear about the particular characteristics of or the qualitative characteristics of accounting information, what kind of the information are being provided by the accounting system, or what is the particular nature of accounting information, right? And relation with other subjects, because multidisciplinary, right? It means this is the particular term we are using here on this platform, because the financial accounting definitely is facilitating the other disciplines also. So exactly what is the relation between accounting and other disciplines or the courses, right? And basis of accounting, there are different bases, right? So cash basis, accrual basis, we would be talking about it. And functions of accounting, exactly the students or the candidates should be aware of the functions of accounting. What are the functions? And there are different branches of accounting, right? So we would be talking about the branches of accounting also. And advantages of accounting, exactly because there is a need of accounting system and we have to maintain the books of accounts in a business organization for a particular period. So that time the student should be aware of or the familiar with the advantages of accounting, so that you are having the keen interest, right? And definitely you will enjoy the accounting study. And limitations of accounting, there are some limitations and we would be covering this particular aspect of accounting also in today's session, right? So the very first thing is the profit and loss statement. What is that and why we are preparing it in the organization? So I think definition you can have a look on this slide. A profit and loss, that is in short the P&L account, also known as the income statement, and it is a financial statement that summarizes the revenue, expenses, and profit or losses of a business for a specific accounting period, usually a financial year. As you must be familiar that there are two types of the year, and we have to maintain the books of accounts as per the financial year. So as the calendar year begins from the January 1st to December 31st, and the financial year that begins from April 1st to 31st March. So we have to maintain the books of accounting as per the financial year, right? And there are some expenses, there are some revenues. So I think first of all you should be familiar with the revenue. This is the accounting term. So revenue, it means you are selling your products or you are rendering your services from your organization. So whatever the earning is there, whatever the revenue is there, it means what are the receipts over there. So sales, right? We are talking about the entire sales in a particular year. So what amount you are receiving from the sales, total sales, that is the revenue, or the other receipts are also included in the term the total revenue of any organization. So revenue is the particular receipt of your services or the selling your products, right, in the market. And expenses, whatever the expenses are incurred or you are making the payment to receive or to use some assets or services, right? So that time the expenses are taking place in your business. So you have to maintain your books of accounts and you have to show revenues and expenses. So that time P&L account is being prepared, and in order to find the profit or loss in the business. So basic purpose of the profit and loss account is to find out the profit and loss whatever is faced by the business organization in a particular financial year, right? So what is the purpose, right? So there are some lines, and the primary purpose of the P&L account, as I told you, is to provide the information to the stakeholders. Who are the stakeholders? Stakeholders is a very common term that means that everyone who can influence the organization or the organization can influence, right? So in any way, that is the stakeholders, right? For example, suppose investors are there, right? Or the government agencies are there, your customers, your employees, and the owners. So there are different users in the organizations who can use the accounting information for their purpose. So exactly very purpose of the preparation of P&L account is to provide the stakeholder with the information or with a clear picture of the company's financial position. It means what about the financial position, what are the assets, what are the liabilities, and what about the performance, financial performance of the company. So by preparing the P&L account, anyone can judge or anyone can evaluate the financial performance of organization as comparing with the previous year's data of accounting, right? Or you can also measure the financial performance, or you can compare the financial performance of a particular company with other competitors in the same industry, right? By matching their accounts or by taking the information, right? So exactly what is the purpose? What is the P&L account? So we have to focus on this particular financial statement, because in the financial statement, P&L account and balance sheet both are prepared. So P&L account at the end of year is prepared in the business organization in order to find out the profit or loss, or in order to evaluate the earnings, right? Exactly what is the financial performance we can measure or we can compare with other companies' financial performance, or you can say on the basis of the previous year data we can compare exactly in which direction the business is going on, because owner of the business organization sometimes have to take or some measures, right, in order to control the activities in the business, in order to reduce the cost of production, in order to smoothly run their business. So the owners are very much desirous about taking or gathering the information from the accounting system or accounting books in order to run their business very smoothly, very efficiently, and sometimes the owners they have to take the decisions regarding expansion of the business or the shutting down their businesses, or the different decisions, financial decisions or the investment decisions, you can say, have to be taken within organizations. So I think it is enough to develop the understanding that why we are going to prepare the profit and loss account, because we need, or the users of accounting need this particular financial statement in order to find out, or in order to check their financial performance or profit and loss account. For example, suppose investors are going to take the decision regarding investment in the organization. So on the basis of the financial performance, definitely they would like to make the foundation, right, that they should make the investment in that company or not. So on the basis of the financial statement, this P&L account, they would be getting the information that exactly what is the profit and loss account in a previous year or in this current year, and on the basis of this information they can measure the financial performance of the company, and on this basis they can take the decision regarding investment in that company in the securities. Okay, so now you are familiar with the profit and loss account, and or you can say the profit and loss statement. Further in this study, definitely you will solve some numericals also, so that you can prepare the P&L account in a particular format, right? So first of all, we have to be familiar with the step by step these terms or these statements. And now we come to the financial position. Exactly what is that? No doubt, on the basis of the assets and liabilities, the users of accounting or the stakeholders are very much desirous of having the information regarding the financial position of a company. Exactly what is the solvency, or what about the solvency, or what about the liquidity, right? Because when the organization has to make the payment to someone, and that time if there is a shortage of fund, there is a shortage of liquidity or the shortage of cash, so that time no doubt the goodwill of organization would be ruined over there. So in order to save the business, in order to maintain the goodwill or reputation of the business organization, we need to maintain the financial position in a very sound picture, right? So what about the financial position? It means the company is going on, the company is earning, right, day by day, and the assets are maintained and the liabilities are maintained. So we have to check, or we have to measure again that what about the financial position on the basis of the liabilities or the assets, and we have to maintain the current ratio, also liquidity ratio, and we can find the clear picture that the company is having liabilities more than the assets, or vice versa. So financial position of a company is represented by the balance sheet. It means at the end of the year again, this is the financial statement which is to be prepared, and the assets and liabilities both are displayed in the balance sheet, and this is the financial statement which provides a snapshot of the company's assets and liabilities, as I told you. And the shareholders equity, it means the what about the shares, or the numbers of shares have been issued in the market with the shareholders. So what about the particular picture of equity shares at the specific point in time. The balance sheet is crucial for understanding the financial stability and the liquidity of the business. As I told you that in the organization, the manager, the finance manager has to maintain the financial stability, and he has to focus on the liquidity because of making the payment at the time of need, right? And what is the specific purpose? You can say the primary purpose of the balance sheet is to give stakeholders a very clear picture of what the business owns assets, right, and what it owes liabilities, and amount the invested by the shareholder, again the equity you can say, right? It helps in assessing the financial health, right, and operational efficiency of a company, because the profit and loss statement, no doubt when you prepare it, giving you the picture of the financial performance, and that profit is transferred to the balance sheet, and it is now the part of the balance sheet, and on the basis of the assets, liabilities, equity, shareholders equity, and the profit and loss, or the particular reserve which has been maintained by the accountant, we can have the clear picture of the financial position of a particular organization, right? And key components are the assets, liabilities, and equity, what is issued in the form of the securities to the shareholders, right? So I think you must be aware of the financial position and financial performance, right? There are basically two terms, financial performance and financial position. Again, I am emphasizing these terms because once you are ready with these terms, that P&L account, it means we are going to measure the financial performance of the company by comparing the earnings or you can say the expenses or revenue, and in order to control over the cost of production in a particular area, we can use these statements, right? But when we talk about the financial position or the balance sheet is providing you the very clear picture of the assets and liabilities what are being maintained in the business, or the business is liable to meet this obligation in the form of the liabilities. So what about the liabilities of a business organization? What about the assets? What are the kind of assets? Because in the balance sheet you will maintain the different categories, and under these categories the different assets would be shown in the balance sheet. In the debit side you can say, or the right side, right? So current assets are there, fixed assets are there, and investments are there. So in the further study we would be taking into consideration about the particular format, and we would be solving the particular numericals, so that the students are capable of maintaining the or preparing the balance sheet as well as the P&L account, right? So financial position, now I think you are clear with. And now I would like to talk about the qualitative characteristics of accounting, right? Because there are some characteristics. How will you recognize, how will you identify a particular system is the accounting information system or accounting system? So relevance is there, no doubt. If accounting is providing you the relevant picture, right, or giving you the relevant information, it means the users of accounting or the stakeholders are in position to take the decision or economic decisions, right, on the basis of this information. Or you can say that the information provided by the accounting system, a particular specific accounting system we are talking about, is in this position to influence the decisions of economic decisions of the users of accounting. So that time we can say that this particular accounting information is relevant, right? Because if the users of accountings are not in the position to take the decision on the basis of some information gathered by from the accounting system, so that time that is not relevant. So if the system or the accounting information is relevant, right, it would be considered as a relevant information when the users of accounting are making these information as a base for taking the financial decisions, right? For example, suppose you are taking the decision, or you are going to consider that we have to go for expansion of the business, and for that purpose a fund is required, and if you are in need to gather the information from the balance sheet that exactly what is the position of the fund. So if the accounting information is being provided by the balance sheet, right, and on the basis of that information you are taking a particular decision, right, and you can say that information is helpful in taking that decision. So that is the relevance, right? So we are talking about the relevance of the accounting information. And faithful representation, no doubt, if we can say that the accounting information system is the unbiased system, because if the accounting system is biased, if there is a manipulation in the accounting system or the accounting information, so that time there is no role of accounting. So accounting information should be unbiased, and faithful representation should be there in the books of accounting or in the records of accounting, right? And comparability, it means you are in the position to compare the accounts, or you can say from the other companies also you can gather the information, or you can compare the financial performance of 2 or more companies, right, taking the information from the accounting system. Or suppose in a particular company, if you are measuring the financial performance as comparing the records, the previous records, taking the information from the accounting system. So comparability should be there, right? If you can compare the accounts, right, on the basis of applying some methods, so that is the particular characteristics of the accounting. And verifiability, it means the same method should be applied, and in order to verify a particular information, it means suppose you are using any formula, any accounting method, for example depreciation, and you have calculated the depreciation value on a particular assets, and after some time again there is a need to verify it. So if you are applying the same formula to those particular data, right, and to a particular cost of the assets, and by taking the same percentage, and you find the same result, so you can verify it, right? Or you can say that timeliness, it means very quickly if you are in the position to capture or to recall any information. So this is the qualitative characteristics again of the accounting information. And understandability, it means no doubt when the stakeholders are desiring some information from the accounting, and they are having the capacity to understand the particular the situation of the company or the position of the company. So if the accounting information is of such kind that that is making the users of accounting convenient to have the picture of business or financial position of a business, so there is a understandability, right? So if there is any information that you cannot use, or you are using but you cannot make a use of that information in order to understand the picture or the scenario of the business, so that time we can say there is no understandability, right? So these are the qualitative characteristics of the accounting information, and easily the students can develop the understanding that how will you recognize this particular accounting system is or this system is the accounting information system. So on these basis, these qualitative characteristics, you can recognize the accounting information, right? And again, one by one, you can see that relevance, that accounting information is relevant if it can influence the economic decisions of the users, as I told you earlier, right? And components are the predictive value. It means the information should help users make predictions about future events. If the users of accounting are going to take the future decision, right, or they are planning for something, as I told you that for expansion of the business, and if you can predict the value that what would be the value of a stock, what would be the scenario in after 2 years of if the particular business is going in the same direction, so what would be the picture of the fund with the company. So you can predict the value, right, and confirm monetary value information should help users confirm or adjust their previous evaluation. Suppose you have already calculated or computed some values, and if the information is helping the users to confirm that this was the particular value in the previous years also. So that is the confirmatory value. And materiality, information is considered material if the omission or misstatement could influence the economic decisions taken by the users, right? So basically, this is the we should take into consideration that we should record those transactions that are of the materialistic nature in the books of accounting, right? So in the principles or the assumptions you will read about it, but right now as a characteristics of the accounting, we are considering this particular point that materiality should be there, and materiality is considered in sense that the information, right, is considered material if the omission or the misstatement of that particular information could influence the economic decisions, right? And second is the faithful representation, no doubt. Accounting information should faithfully represent the economic phenomena it purports to represent. It means that the information should be complete, neutral, and free from error, right? Because the users of accounting definitely are desirous of having the true picture of the business, and if there are errors in the accounting systems and they are not capable of gathering the information in a very true sense or exact position of the business, they are not aware with the business position through that accounting system. So there is no use of the accounting, right? So accounting system is that system which represent the true picture, the clear picture of the business, right, business firm, and it should be complete. And there is a particular principle of accounting that everything should be disclosed, right? So every information should be disclosed in the books of accounting, right? So there is again a conflict between the principles of materiality or the full disclosure. So we will be talking later about it, these two terms, but right now on this platform I would like to make you focus on the particular faithful representation of accounting. It means the accounting information should be very clear, very neutral, right, unbiased and complete, and it should be free from error. Because if error exists over there, there is no use of the accounting information, because on the basis of the information you are taking the decision, the different financial decision or economic decision in the business. For example, if you are planning for expansion of the business or you are going to select any proposal, right? you are having a different proposal in your hand, very good plans you are having, and you are going to make the investment in that particular proposals. So if on the basis of the accounting system you find that we are very strong with the financial position and we are having the sufficient fund to be invested in the proposal, and you just take all the measures in order to start the project, right, by taking the information from the accounting system, and after some times you find that you have taken different measures in order to establish the new plant, or you are going to take the different measures already you have started, right. So that time if you find that you are shortage of funds because there was an error in the accounting books, and now you cannot go back, now you cannot withdraw the money already invested in the new projects. So on the basis of the information, the stakeholders are taking the different economic or the financial decisions. So accounting system is the system that is considered to be the faithful representation, right? So completeness should be there, and freedom from the error, and neutrality should be there. Information should be unbiased and not favor one side or another. Suppose, for example, the finance manager, right, wants to manipulate the account in order to show the very good picture of the business, and he is manipulating in the accounting records, or he is just you can say making the particular amounts in the balance sheet differently as they those informations are not true. So information should be unbiased, right? Because the financial manager wants to show the very good picture of the business in order to attract the investors, right? And investors, on the basis of the information from accounting books, find that the business is going well and is performing very well in the industry. And on those, on that basis, if they are taking an investment decision in the company, so there is a biasness. But the information or the accounting information, as we are talking about, that faithful representation should be there. So it is unbiased when everything is in order, everything is placed in the books of account, every transaction as per the evidence, as per the voucher system, right? So what about the voucher system? It means suppose you are buying some material or some products, right? So you should maintain the bills of those purchases, those transactions, right? And you are selling something, so you should maintain the bills also. And if you are making some payments, so you should have some vouchers of payment also. So every every transaction should be recorded in the books of accounting on the basis of the voucher, right? So there is a voucher system, and at the time of auditing of account, there is a need of the vouchers, right? Because on the basis of these vouchers, these receipts, these bills, the auditor would be verifying the transactions in the books of accounting, right? So information should be unbiased. Okay, so I think faithful representation. Now this is the point that where you can have the understanding that what is the characteristics, qualitative characteristics in the terms of the faithful representation and comparability. So now we come to the comparability. What's that? As I have already discussed with you, that information is comparable if it can be compared with similar information about other entities, right? Other companies in the same industry, or with the similar information about the same entity for the another period or date. It means information, right? We are collecting the information from the books of accounting, okay, on the basis of account, on the basis of records as we have maintained the books of accounts. So if we want to compare the information that exactly what was the financial performance earlier and what about the current financial performance of the company. So on the basis of two different periods accounts, if we are capable of finding out the pictures of that organization, right? So we are in the position to compare the accounts. So comparability is again the qualitative characteristics of the accounting, and the importance, consistency should be there. Disclosure, as I told you, that information should be disclosed, or the accounting policy should be disclosed over there, right? And again, the verifiability, accounting system again is having this particular characteristics. It means we can verify if we are in the position to verify the accounts, right? Or by using the same formula or same methods towards the particular aspect. So we can say that the accounting system is verifiable, right? Or you can say the information is verifiable when independent observers using the same methods can reach a consensus, right? For example, suppose there is a cost of assets, okay, and you are charging the depreciation on it, right? And you find that exactly after 5 years what is the residual value of any assets, and on other hand, the other person, other accountant is calculating this particular depreciation amount, and by using the same method, both the persons reach to a consensus. So we can say they are in the position to verify the account. Right? Direct verification and indirect verification. So direct verification involves verifying an amount or other representation through direct observation. Right? Suppose you are maintaining the books of account, and on the basis of information that there are some revenues, there are some expenses. Now the books is or the ledger balance is showing you that this is the particular cash position in the company, and if you want to verify that whatever the cash position is being displayed by the accounting books. So if you want to verify it, you can verify through counting the cash, right? Whatever the cash is with the organization, if you physically if you count the cash and you are having the information about the amount of cash, right? So whatever the books are displaying and physically if you count the cash, so you can verify it, right? And indirect verification again involves the checking the input to a model, formula or other techniques and recalculating the output using the same methodology as I took the example of charging the depreciation of the assets. Timeliness. Information is timely if it is available to decision makers in time to influence their decision, right? As I told you that if the users of accounting or the stakeholders are in positions to recall or to retrieve the information from the books of accounting, right, very timely as per the need. So there is a particular advantage, there is a use of accounting if timely or whenever they are taking the decisions or the information is not capable of influencing the decisions or the economic decisions of the stakeholders that time, so there is no need of the accounting, right? So accounting information should be of nature that the very quickly the user of accounting can retrieve the information from the books of accounting, right? So prompt reporting is there and balanced with accuracy. No doubt if very quickly you are retrieving the information but the information is not correct, so accuracy is not there, right? So while timeliness is crucial, it should not compromise with the accuracy. Accuracy should not be compromised, right? Because as I told you that there should be a very clear picture. The users of accounting or the stakeholders of accounting are taking or are going to take the decision based on these accounting system, these accounting information, right? And if the accounting information is not correct, accordingly the decision would be taken over there and maybe the business is suffering loss. So in order to save the business, right, in interest of the business, we should be very specific while maintaining the books of accounting, and it should be kept in the mind that accuracy should be there and the prompt reporting system should be there, because at the time of need of when the stakeholders are taking the decisions, right, or they are in need of taking the financial or economic decisions, so quickly they can retrieve the information, right? On the basis of they would be taking the further decisions, economic decisions, and accuracy should be there. Otherwise, if the true picture doesn't come, right, so they are not capable of taking the very right or quick decisions. Understandability means the information is understandable if it is classified, characterized, and presented clearly and concisely. When you will maintain the books of accounting, for example, journal entries, you would be maintaining, and you are maintaining the ledger books, and you are summarizing the balances in the form of trial balance, and at the end of year you are capable of maintaining or preparing your financial statement in order to find the clear financial position of the business. So information is understandable, right? If you are writing the books of accounting in a very haphazard manner and you are not capable of gathering the information as per the need, so there would be no understandability, right? So this is the characteristics of the accounting system, accounting information, qualitative characteristics, that understandability should be there. Someone is seeking the information from the accounting system, but when he or she goes through the accounting system and finds the difficulty in order to understand that exactly what the books are reading, right? So information is understandable if it is classified, right? So in this order we maintain the ledgers, right? We are grouping the different accounts in the ledgers, and we are presenting, right, those information in the form of the trial balance. It means we are summarizing the information by taking the ledger balances, and at the end we, in order to give the picture, provide the clear picture of financial position or the financial performance, we are making the financial statement in the form of the P&L account and the balance sheet. Already I have discussed with you, right? So what about the importance? Clarity in presentation and avoiding complexity, because if you want to avoid the complexity of the bombarding the information, so that time information should avoid unnecessary complexity. So in order to avoid this complexity, you should establish accounting system within your organization in a very smooth way, you can say, and efficiently, so that everyone who is the user of accounting can gather the information, can retrieve the information from the accounting system, and can use those information in order to take the very wise decision, right? Accounting and its relation with other subjects, other courses. So you can say that this is the time of the multidisciplinary, right? It means the students are taking the multidisciplinary subjects to study in a particular program. So economics, finance, business management, information technology, and law. Today we, in this session, we are discussing about these particular subjects, and there is a particular relation with these courses of the accounting, right? So one by one we will have the look. The very first is economics. So resource allocation. Accounting provides detailed financial information essential for economic decision making and efficient resource allocation. So when it comes to allocation of resources, as the organization is working, and there are different departments, and but the limited resources are there within organizations, and the allocation of fund is required, suppose in the different activities. So on the basis of accounting information, we can say we can allocate the resource, right? Economic performance analysis. When we want to know that, or we want to be familiar with the economic performance, right? And we are going through a particular analysis, right? So that time we have to rely on the accounting information, and economic position can be evaluated on the basis of accounting information, right? So there is a need, again, there is a relation between the economic subject as well as the accounting, right? Economic planning and policies. As you see that the government or the business owners are making the policies, no doubt they are planning something on the basis of the accounting information. So there is a particular relation between economic policies or financial policies and accounting information. And finance, when it comes to finance subject, right, investment decisions are to be taken. As I give you the example, that when you are planning some assets, or you are investing, or you are going to make some investment in the new proposal, or you are expanding your business, so that time the investment decision are to be taken. So on the basis of the financial information, right, you need the accounting information, right, because you have to take the decision regarding the investment. And there is a particular, you can say, the relationship between accounting information and the financial decision. So whenever it comes to the finance, right, because in the financial management we need to take some decisions, right? For example, capital budgeting, you can say. For example, dividend policy you have to make. So that time, no doubt, you need the accounting information, and on the basis of these informations, you would be making some policies, you would be taking some decisions, right? So financial management is that particular subject where the capital budgeting, or you can say you have to take the decision regarding the financial planning, right? Or you have to maintain the leverage ratio. Suppose the organization wants to work on the leverage, right? You are using the debt as well as equity capital. So what about the debt? At least you have to ensure that the company's position is good. Suppose already the company or the organization has issued the debt securities along with the equity shares, right? So if you are planning that we should go further to raise the fund from the market in forms of the debt security. So if debt is over, right, or you are not capable of maintaining the debt equity ratio, so maybe the equity shareholders who have invested in your business are observing that the company is not taking the right decision while raising the fund, again rising their debt ratio, right? So they would be not attracted towards to retain their investment in the company, and they would go away, right, and withdrawing the investment from that particular company. So there are different financial decisions which are taken by the company organization on the basis of the accounting. So ratio analysis is there, right, and ratio analysis again will demand some information from the accounting system, because ratio analysis is a particular tool, right, and you would be applying the formula towards, for example, suppose current ratio is to be calculated, so you would apply a formula current assets upon current liability. But what about the current assets and current liability? Where you will find the information about the current assets and current liability? From the balance sheet, right? So already the balance sheet, the financial statement, right, as known, already prepared by the accountant, and now the information about the current assets and current liabilities would be considered from the accounting system, and on this basis the ratio tool would be applied over there in order to take the financial decisions, right? So this is again which shows that there is a relationship between finance and accounting system. And now we come to the business management as strategically planning as the stakeholders or the owners. Basically, we would like to talk about the owners of the business. So they are taking the strategic decision, right, for shutting down the business, for expansion of the business, for acquiring any business, acquisition or merging of the business, right? So that time the information that is required, that what about the fund? Are we having the sufficient fund in our hand in order to invest in the new business, as we are going to merge two businesses, or we have to make some payments also, right? Or we need to meet the financial obligation also. So these informations are required at the time of merging, acquisition, shutting down, right? So we have to take the decision on the basis of the accounting system again. So we have to take the strategical decision, strategical planning on the basis of the informed, or you can say the informed business decision can be taken on the basis of the accounting information, right? And when it comes to performance measurement, because suppose the owners of the business are going to take the decision that there is no more earning, this particular business should be shut down, and there is no use of running this business in this particular scenario, because there is low performance, or they are of idea that the business should not be continued, right, in the future. So definitely when the decision regarding the shutting down of any business is to be taken or to be considered, so that time the financial performance, the information regarding the financial performance is required over there, right? So the users of accounting, as we are talking about the owners of account business, would be taking this or such kind of the decision on the basis of the financial performance, and financial performance can be measured on the basis of the accounting information, right? And when it comes to cost control, no doubt, as you know that in the stiff competition, right, at the time of the stiff competition, if you want to sell your products effectively in the market, you want to increase your market share, if you want to have the more customer database, so that time you need to provide the products at a very competitive price. And competitive price is it is very Herculean task to maintain the competitive price, because of the number of aspects. The one is the you can say the cost. If the cost of production is high, no doubt you will have to charge the high price in order to earn some profit, right, from the market. So that time, if you are not in the position to increase the sale in order to increase your profit in the business, so that time you will think that we should control over the cost of production. And cost of production, if you want to control, that time you need again the information from the accounting system, that exactly what areas are there where the particular expenses are being made in a very you can say the large expenses are being made. So that time, in order to control over the cost of production or cost of your business operation, you need the accounting information, that you are paying more wages, if you are paying more salaries in compared to other entities in the same industry, or as compared to your earlier years, where you see that the particular sale is no sale is increased, but the expenses are increased day by day or year by year. So that is the particular situation where you definitely will require some information from the accounting system, because everything, every record is there, every transaction has been recorded in the books of accounting, and the books of accounting you can use for gathering some information from, and on the basis of these information you would be taking the decision regarding the cost control in your organization. So business management has a very large scope, and accounting information again is having the relationship between with this particular discipline, that is the business management. And I think there is no requirement to go ahead with this particular relationship topic of accounting information business management. Now I think I am very sure that the students are very much clear about the relationship between business management and the accounting system. When it comes to the information technology, automated system is there. As sometimes the students are very much confused that IT is a different area from the accounting. So why we are calling that, or why we are considering that there is a relationship between accounting and the information technology? No doubt, as with the advent of technology, the advanced technology exists in the market, and for example, blockchain, robotics, and artificial intelligence and IoT, and the different technologies are existing in the market or are emerging in the market, right? So in order to, you can say that we need, the very first thing is that we need the accurate picture of the business. We need to accurate information, because the information of accounting information is useful when it is providing you the clear picture of the business, right? If there is a chance to manipulate the data, right, in order to avoid that particular practice in the accounting, we need a particular system. So today's in this era of technology, we can use the advanced technology to maintain the books of accounts also. So blockchain, again there is a new technology, and we can use this particular system where we can strengthen the accounting system, right, or we can save our data, right? So information technology and the other advanced technologies are being used in maintaining the books of accounts also, right? Or we can retrieve the information without, you can say that there is no any manipulation, right? So if you want to save your data, if you want to secure your data, if you want that your data is intact, so that time you must use these system, these technology. So security is always required, the compliance is always required, right? So IT system ensure the security of financial data and help in complying with the regulatory requirements. Today, as you see that the government is also very vigilant, right? And everything is, or every data is being attempted to be kept on the digital system, right? Digital India, we are talking about this concept, right? So there is a particular relationship between the information technology and the accounting information. Okay. Now this is the time for considering the law course or the law subject, right? So regulatory compliance, accounting practices ensure that business comply with financial regulation and standards set by law. And legal evidence, financial records serve as legal evidence also. When there is a conflict, there is a dispute between two parties, and you or those parties, aggrieved party, approach to the court. So that time the court will demand for the some vouchers or some books of accounting. So there is a particular role, right, of accounting information in the law where there is a legal evidence is required. Okay. And when we talk about the taxation, accounting provides the necessary information for accurate tax computation and compliance with the tax laws. For example, income tax or the GST, right? So these are the laws, these are the act where the accounting information is required. So there is a relationship between taxation and taxation laws and accounting information, because the taxation agencies will demand for some kind of the information from the accounting records, right? So there is again a relationship between law and accounting information. Now in today's session, definitely we are covering the basis of accounting, right? So there are two bases, the cash basis accounting system and accrual basis accounting system. It means when the particular transaction is taking place in the business, right? So if you are making the payment, right, or the transaction which are of monetary nature and are made in the cash, right? Suppose you are making the payment, you are buying the goods and you are making the payment, and you are selling the goods, you are receiving the payment. So whatever the transaction is related to the cash, only those transactions are recorded which are of the cash nature. So that is the cash basis accounting. But in general or in real, you will see the accrual basis accounting system is maintained where suppose you, the worker, or you have taken the services from someone and you have not paid the wages or salary or as a remuneration to that person you have taken the services from, right? But you have to, because you are maintaining the accounts for a specific period, so that time you have to maintain that these expenses is matched with the revenue of this particular accounting period. So you have to display every expenses which is related to that particular time period, and irrespective of that whether the payment has been made or not. So that is the accrual basis accounting system, right? So basis of accounting and difference, I think now is very clear, that when we are considering only the cash transaction and when we are considering every transaction irrespective of the cash nature, right? So basis of accounting. And now we come to the functions of accounting. What about the functions of accounting? No doubt when we are studying the accounting, there are some functions of accounting or some functions of this particular subject. So the very first your function is recording transactions. So when we are maintaining the books of account, we have to, or the accountant has to record the transaction, the business transactions which are of the monetary nature in the books of accounting, because we have to find out the financial performance, we have to find out or we have to go with the clear picture, right, of the business financial position. So recording transaction is a primary step where the day book is maintained, right? Classifying and summarizing data, again this is the function. It means we are maintaining the ledger, we are grouping the accounts, and we are summarizing the records in the form of the trial balance as taking the balances from the ledgers. So this is the second function. And analyzing and interpreting information, because there is no use if the accounting system cannot influence the economic decisions taken by the users of accounting. So in order to analyze any information, in order to analyze the financial position, financial performance of any organization, or suppose the stakeholders are there to interpret the accounting information, they are suppose not in the position, so there would be no role of accounting. So again there is the importance of this function, right? So in order to analyze and in order to interpret the information, this is again the function of the accounting. And communicating results, because suppose the accountants are maintaining the day book, the ledgers, trial balance and financial statement, but are not capable of communicating something as a result to the business owner, so that time, or the stakeholders, that time there would be no use of the accounting. So this is the function again of the accounting, that accounting is communicating the result also, and complies with legal requirements. As already we have raised this issue, that as per the requirement of laws, when it comes to income tax, when it comes to GST, we need to comply with these acts, and we have to provide some information as required by the government agency or by the taxation officials. So that time, in order to comply with the legal requirements, we need the accounting. So accounting again is playing a very vital role when it comes to compliance with the legal requirements. Okay. Now this is the time to study about the branches of accounting, because this is the very important that the student should be familiar with the branches of accounting, because the financial accounting, managerial accounting, cost accounting, tax accounting, auditing and forensic accounting, these are the branches where you would be study. You will study about it, and you can use these accounting system again in your organization. So the very first thing is the financial accounting, that every user of accounting wants to measure the performance of accounting system, want to record the transaction in order to gather the information at the time of requirement. So financial accounting is maintained, right, where there is a need of recording the basic transactions, or every transaction you can say, but in the books of accounting, and further these accounting informations are used for taking the economic or financial decision, right? And managerial accounting is that one that is also a branch of accounting where the you can say the management is going to take the decision on the decision based on the accounting information, or you can say that analysis tools are used in order to take the wise decision in the organization regarding the investment, regarding the capital budgeting, you can say, regarding the leverage, or making some policies like dividend policy, right? So suppose you have to calculate the cost of capital also. So managerial accounting is that accounting which is concerned with using some tools while taking the information from the financial accounting. Yes, it is very important to study that whenever you are talking about the different branches of accounting. The financial accounting is the very primary, you can say, the accounting system, because it is always required when suppose you go with the other branches of accounting, there is a need of financial accounting, because the basic of the basic information have been recorded in this particular system, and on the basis of these already recorded informations, you will take the decision in the different branches, and you will be maintaining the different accounting system in the different branches. And cost accounting, when there is a suppose you are concerning about the manufacturing organization, so that time if manufacturing process is going on and you have to calculate a cost of product, because for example, suppose you have to set the price of the product to be charged in the market, so that time you have to calculate the cost of product, right? So on the basis of the entire expenses which have incurred in the organization, you have to calculate the cost of a product, right? So cost accounting is that branch of accounting where we would be estimating the cost of a product while making or preparing the statement of cost or the cost sheet, right? And there are different aspects of the cost accounting when you would be studying about the cost accounting, because right now we are studying about the financial accounting. So I am not focusing very much on these branches because this is the time for the financial accounting, and students are supposed not to be confused that sir, you are telling us about the financial accounting, why we are going in the other direction of studying in the studying about these managerial accounting, cost accounting. But you are supposed to have a very little knowledge on this platform right now, as we are focusing the branches. So tax accounting, where we are maintaining the accounts and we are considering the also tax aspects where we are maintaining the accounts. And auditing, again there is a branch, because as I told you that in order to verify that everything is in order, and we have to go for inspection of books of accounting, so there is a particular system of auditing, and again the forensic accounting. So different branches of accounting are there. Right now I am not focusing very much on these branches, and I am not going further or in detail of these branches of accounting. So because in the different study you would be learning about so branches of accounting, now you are familiar, and now we would go with the advantages of or role of accounting, right? So what are the advantages, why we are maintaining the books of accounts, right? So the very first thing is that accounting system provide the financial information. So this is the use of accounting information, because I told you that the stakeholders are they are desirous of having the information from the accounting system in order to take the wise decision in the different areas, where suppose investors are looking forward the information from the accounting system in order to invest in a particular company. They want to know exactly what is the financial performance of the company, and what is the financial position, whether the company is having the sufficient fund, or what about the maintaining the debt equity ratio, because they are having the risk of their investment. So in order to reduce the risk of investment, they want some information from the accounting system. So we can say there is the advantage of the accounting, or there is a role of accounting in providing the financial information to stakeholders and assist in decision making. As I told you that different financial or economic decisions are to be made within organization. So accounting system or information assist in decision making process also, and facilitate statutory compliance, as there is a relationship, we have already discussed about it, that there is a relationship between the law subject and there is a role of evidence, and the tax laws are requiring some information from the accounting. So it facilitates the statutory compliance with law also and helps in performance evaluation when it comes to evaluate the financial performance in a business. So advantage, or you can say there is a particular role the accounting system is playing over there. It is a vital role when it comes to evaluate the performance of any business organization, because the owners definitely are always desire to have the information regarding their financial performance, because on the basis of the financial performance they would be taking a further decision to expand their business or to shut down the business, right? And there are some limitations of accounting also. It does not reflect non-financial information, right, and may be subject to bias, historical in nature, and can be complex and costly. And it relies on estimates and judgments, right? So limitations you have to focus also when it comes to the accounting system, because as we see that there is the information should be unbiased, but sometimes the data can be manipulated, right? And accounting information is also having a limitation, because we know that the monetary transactions are being recorded, right? Non-monetary transactions are not being recorded in the books of accounting. So that time, if you want to take the information regarding the honesty of your employees, right? So you cannot take this particular information from your accounting system, right? So there are some limitations already now you are familiar with, right? And what about now this is the time to recap of this key point already being discussed in today's session, right? Importance of financial and loss and financial provision, because if you are preparing the P&L account and you are preparing the balance sheet, no doubt you would be in position to find out the very clear picture of the financial performance as well as the financial position of the business, right? And key qualitative characteristics of accounting information, already we have discussed that there are some characteristics of accounting, and there is a relationship between accounting and other subject or other courses also, because the you can see that the accounting is playing a very vital role when it comes to apply those information towards the other subjects, right? So there is a relationship, and today we discuss about the different bases and what are the functions of accounting, and there are different branches, as I discussed with you that cost accounting, management accounting, taxation, and different branches are there, and what are the advantages and limitations of accounting. So these are the aspects of accounting, and you should be, and every student of accounting on the common side should be familiar with these aspects of accounting, because if you want to maintain the books of accounting very efficiently, so you should be familiar with the concepts of accounting, you should be familiar with the methods of accounting, you should be familiar with the different branches, right, and the advantages also. And there are some limitations, because if you want to record every transaction and if you want to take the every information from the accounting, it is not possible, because the transactions of those are of monetary nature are only being recorded in the books of accounting. So there are some limitations also, and advantages, I think there is no need to count the advantages of accounting, because the different users of accountings are using these informations taken from the accounting system or books of accounts, right, in order to take the wise decision. So I think this is okay with today's session, and you will be familiar with all the aspects of accounting. And thank you very much.